I want to start with the CFTC and Justice Department accusing a U.S. soldier with using classified information to make more than $400,000 on Polymarket's international exchange. How does Kalshi police that type of activity, so-called insider trading, on its platform?
So Kalshi is a regulated prediction market. So we are registered with the CFTC.
That's the first distinction between the international
very big distinction.
Polymarket.
Very big distinction. So the CFTC has a number of regulations that apply to regulated prediction markets, including a requirement that we surveil all transaction activity on the platform. So we have surveillance systems that monitor all of our markets, and they have thresholds that are curated for insider trading, market manipulation, wash trading, similar types of activity that you see on other exchanges.
So would it be fair to say that that trade would not have happened on Kalshi's platform?
I don't think that's fair to say. That's never the standard that we apply to platforms. There's illicit activity that happens on all kinds of exchanges, on the New York Stock Exchange, on NASDAQ, and on prediction markets. It would be flagged, detected, investigated, and if we found evidence of actual illicit wrongdoing, we would refer it to the Justice Department and the CFTC.
So can you share with us what it is that you do, what kind of surveillance Kalshi does?
Yeah, absolutely. So we have an internal surveillance system that we've built that's curated for prediction markets specifically. But we also have partners that help us in the space. So we've partnered with Solidus Labs, which has a background in cross-product monitoring and surveillance in crypto, and they're developing prediction market-specific solutions. We've partnered with them to layer on top of our own internal surveillance systems. And we also partner with Integrity monitoring services. So we use IC360, for example, for sports-specific monitoring, and we're expanding that partnership in other directions, too.
Is there a specific red line that warrants action that prompts you to go all in?
I think this is where the leverage between tech surveillance and AI tools and human touch sort of comes in. We get a lot of flags, and we're able to use AI and other tools to prioritize certain alerts. But we still rely on an investigative team of human analysts that look at every case and question traders, collect documents, and then make determinations based on what the evidence is in a particular
How
case.
big is that team right now?
It's growing. It's growing fast. Kalshi has exploded in volume in the last year. So we're putting a lot of resources in our surveillance and detection, and our external vendors help us a lot in this space too.
We saw the news, Bobby, last week related to 3 enforcement investigations. They were all involved people betting on things they were personally involved in. Where do you draw the line when it comes to what's insider information? So in other words, like, who can and who can't make a prediction in a certain market?
So there's a nice layer in the regulated exchange framework that the CFTC oversees. So exchanges have their rules, and those rules can police certain activity that might be unique to the platform. So on Kalshi, we have unique insider rules that prohibit people trading with material non-public information, but also people can influence outcomes of contracts. And then, of course, in terms of cases that we escalate, we hew closer to federal law, right? We're not going to flag for the CFTC something that might be against the Kalshi rules, but not against the actual federal regulations or federal law. So we try to hew closely to the federal rules as they apply, but there are these unique products that we offer that Kalshi's exchange rules acts as like a sort of front layer of enforcement on the platform.
So, you can make the argument that insider trading happens across all financial markets. We've certainly seen it in traditional markets like the stock market, for instance, and we've seen it in sports books as well. Prediction markets clearly aren't immune, but I'm curious as to whether they're more susceptible to it than other markets.
I don't think they are more susceptible. I think that it's true that the array of products is wider, but the depth of insider information is actually a bit tighter. An event contract is a product that's distilled to one very unique question. And so the scope of information that's actually material to that question is narrower than all the information that might be material to a stock or a commodities future.
Just to follow up on Scarlet, you have this post out on LinkedIn today. It says that insider trading happens in all financial markets just because the use of information, these are your words, just because the use of information on prediction markets looks different doesn't necessarily mean it's any more susceptible to insider trading. I think critics would point out that there's a difference between prediction markets and other exchanges. The culprits are clearly defined when it comes to these other exchanges. So they're corporate officers, directors, employees. On Kalshi, insider could be a lot of people. It could be a producer who knows who a certain guest could be on a show, a soldier with classified information, an athlete. How do you police a market where you can't define who the insiders are? And like you said, with a limited but growing team?
So I think that you start with where the federal rules exist, right? So we can overlay those on the clean cases where you have some sort of duty of confidentiality. You're a corporate insider, or you're a fiduciary, or you're misappropriating information, taking something that you got access to and aren't supposed to use for personal gain. That's sort of the federal framework that exists now.
And that's where you'd see it happen with public markets, with executives at companies.
That's right. But I also think that Americans have shown themselves to be quite dissatisfied with the limitations of that approach. And so at Kalshi, our exchange rule framework is a bit broader than that. And I think overlaying that rule framework onto the products that we offer is helpful guidance for our regulators and for legislators who are considering potential rules that govern these different types of products. I think the federal rules in insider trading are helpful, but we've seen the limits of their enforceability on securities markets. And so it takes sometimes new products to emerge in regulated spaces to think about the way the rules are working and where they might fall short. And that's what we're trying to do. You
said you have a small but rapidly growing team. I wonder whether you just need a bigger enforcement team, or do you rely on tech to do a lot more of that for you?
I mean, the tech, the advancements in tech have helped us significantly. And I actually think being new and building these things from scratch in our exchange has existed for the last 8 years or so. Building things from scratch in this time frame has been a lot nicer than, say, being an exchange that has surveillance systems dating all the way back to the 80s. So we are able to leverage tools a little quicker and build solutions a little faster. Ultimately, what we're doing is solving for what a lot of people see as the hardest use case on insider trading. And as we grow the product into sometimes more traditional types of event contracts, I think it's actually going to be easier for us to overlay the product we're building onto more traditional types of insider trading frameworks.
Does a lack of case law around this versus traditional insider trading make your job more difficult?
I don't think so. I mean, you can tell when people are utilizing unfair access to information to cheat. I think at the core of insider questions, that's always the driving force. Is there unfair information asymmetry? And that's sort of the guidepost that we're using as we think about insider trading on Kalshi. I also don't think that a lack of case law should ever inhibit us from, launching new regulated products. That's how we make more case law and develop smarter rules around insider trading that might end up overlaying back on securities and other traditional markets.
What kind of interaction do you have with traditional law enforcement? How active are they in referring things to you or pointing things out?
I would say we refer a lot of things to them. And we've gotten questions from them as well. It's a very regular feedback. I speak with the enforcement division at the CFTC on a regular basis. And DOJ where appropriate. So, there's an open dialogue, as there is with, many financial exchanges in the United States that do regulation, and, banks and other regulated institutions as well.
We're going to hear from Fed Chair Jay Powell tomorrow. There was a funny moment a few weeks ago when he was at Harvard, and he was asked, what are you going to say? And it was clearly a reference to
Are you going to say good afternoon?
Yeah, you're going to say good afternoon. It was clearly a reference to a mentioned market. It does seem like these mentioned markets are particularly susceptible to insider trading. Do you have an obligation under the Commodity Exchange Act not to list contracts that are susceptible to manipulation?
I think it's important for a regulator to make that analysis. That's not the analysis the CFTC has made. We monitor mentioned markets the same, way at a high level that we do for other markets, but we also look for specific behavioral patterns that are unique to mentioned markets. So, it might take a different shape than another event contract, but we're still able to detect anomalous activity in a way that might be unique to mentioned markets.
Can you share with us any sort of information about, ways you've been able to prevent insider trading or potential insider trading? Because everything that we've seen is reactive in the sense of, okay, this person was fined, this person was banned from the platform. Do you prevent trades from actually happening if they're flagged?
A headline that didn't happen.
Exactly,
right.
Yeah.
Yeah, so a few months ago we announced that we were implementing some new engineering solutions that would block candidates preemptively from trading on themselves. The cases that were announced last week and other cases that were flagged were part of that solution being implemented. We also preemptively block athletes from trading in their own sport and league that they are flagged from our partner IC360 or internal lists. And I think that is a model that can be followed in in more traditional markets as well. It's not something that you see in the stock market, but it is something that, with more effective list sharing, could be easily accomplished.
So does that grow in the future? Like more people being restricted from doing certain things on the platform?
To me, it's the name of the game. If you can get information sharing, and we saw the CFTC announce an effort for MOUs between sports leagues and prediction markets, I think that could apply across a panoply of markets and have financial institutions sharing information so that we're not chasing bad activity. We can't leave it to the regulators to run after, the explosion of trading volume that we live with in the 21st century. It's great to put in these preemptive solutions. We certainly think we're leading the way on that effort.